go take a look at the market today for April 22nd, 2025. And it was a bounce back day overall. Almost every stock in the S&P turned green. The S&P was up about 2.5% on the day. NASDAQ up a little bit more than that. Same with the Dow. And it was an across-the-board rally on more optimism around trade deals. And I think this is the biggest rally that we've seen that is backed by more optimism that some trade deals will be agreed upon. And it's about the most important trade deal, and that is China. And the report said is a behind doors meeting with Scott Bessent with JP Morgan said that he's optimistic that there will be some sort of trade deal, that this is untenable to continue in this direction. And once again, that is something the market really loved. Now, this may be the first of just more rumors that give optimism to the market, that maybe spark some sort of short covering rally, etc. But if you look into the grand scheme of things, we're still kind of in this no man's land between about 5,000 on the S&P and 5,400. Between there, that's just consolidation. And then if we break out of that range, that's where you'll probably get a more measured move. But you can get big down days like you saw yesterday, and then big up days like you saw today. And they almost cancel each other out, but it's obviously a positive to get no follow through from that big down day yesterday after OPEX last week. And that was a big driver. There was a lot of puts that were expired worthless. And so there was some gamma hedging unwinds that really pushed the market down last week. Yesterday. And so you're getting a bit of bounce back. And once again, chop is to be expected as uncertainty remains. And the longer these tariffs are in place, the longer it takes to get trade deals done, the more economic damage there will be. Now, remember, it takes about 1.5 years on average to negotiate a trade deal. Obviously, they're not going to wait that long. They're doing this 90-day pause. How many can they get done in 90 days? That's going to be difficult. They just had trouble with Japan getting that done. And that was actually something that was in negotiations. They even said in China, on the Chinese side, there's no negotiations going on right now. Even China said that there will be punishment for other countries that negotiate against China's interests in their trade deals. And so this continues to be contentious, even though there were some big headlines that were positive. I don't see really a lot of true movement on either side. And when you can't get a deal with Japan, which is obviously an ally, we protect them militarily, that's not a good sign that you can get really deals done. Now that can change, obviously, but right now you're just getting a lot of chop. Now the dollar was stronger, about 0.7%. So that was a bounce back from a 3-year low that it closed at on Monday. And then gold finished down 0.2%. Gold is looking a little bit tired here, a little bit overbought. I would not shock me to see this pull back. We hit about 3,500 on the gold price, and I could see that easily pulling back into the 3,200. Would not shock me at all. You had WTI crude up about 2%, so oil did fairly well. And this continues to be a market driven by the tariff narrative, because that's just what is most important in today's economy. Now, you did have earnings after the bell with Tesla. That was a bit mixed, or at least the reaction was mixed overall. On the economic front, you had the April Richmond Fed index that fell -13 to -13 month over month. Consensus was only -2. So certainly much worse than expected. And all three major components were worse than expected. You had shipments and new orders fell to -17 and -15 respectively. Unemployment fell from -5 to -5 from -1. So, and then you had the average growth rate of prices received increased as well. Now, not dramatically, but it did increase. So what you see there is another stagflationary economic data point. And that's what you get in an inflation, in a tariff regime. you get stagflation. Prices higher and economic stagnation. That's what stagflation really means. And so that was the market today. A nice bounce back. We'll see if we can follow through, or do we just continue to get more chop? Once again, between 5,000 and 5,400 on the S&P, that is a no man's land, and it doesn't mean anything really until we break out one way or the other.